Hi everyone. Happy New Year to everyone. This is July, sorry, January 6th, first week of 2024. I know the new year has started with a shaky move, but let's see how it's doing. Sometimes we cannot conclude based on few days of price action, and that's what we do every week. We start with the lower time frame to see what it's doing in recent time, like in last few hours or day. Then we go higher with a time frame and see how one day looks like and then 1 week looks like, and that's how we determine what is the direction, what is the health, and that gives us the confidence. So far there are no surprises. Um, so um, let's look at 4 hours. When I see 4 hours, first of all, the consolidation expanded horizontally in terms of timeline and also in a range from a range point of view. Now, this was a spike, and this was based on the news that the ETF is going to get delayed. So I think the breakout was eminent here, and this was shot down by that news. Um, but we could see that news was not for didn't push the price break below this key level, and that's important. So sometimes you see this kind of crazy move, but then we had to see what level it's breaking, and we could see that even on 4 hours this was very short term move because the closing was here. So even the closing was 50%. If you look, if we think that this was the beginning, 45K was the beginning of the drop, let's say, and it touched almost the 40K range, mid 40K range, and the closing was in 43K. So that was not a problem when you look at this one on 4 hours. It was scary though, but that's what we do, right? We try to see what level it breaks, and I see the whole entire consolidation is intact, except that this is a false breakout. Now we can say retrospectively because it was not a false breakout, it was a real one. It's just a way of expressing. So what happens is sometimes the breakouts are real, but then it followed by some kind of bad news, some kind of bad event, and then brings down the price. So the surprising move on the downside, we then call that this was a false breakout. It's not a false breakout in my definition or language. This was a real breakout. Unfortunately, there was unfavorable event and the market was sentimental about it. And then, some trader might have shorted and all those things, right? But eventually you can see the quick recovery. Right. So right now, price is, but BTC is back to the upper zone, upper break. So again, this was a breakout a few hours ago, right? And this is positive consolidation. If you look at this cluster, it's annoying, but we are not going to trade anyway. This is like 4 hour to dissect what is happening in intraday time frame. This is not to determine any kind of trend here, right? We try to see the inner structure to see to get some clues. Otherwise, this time frame is useless from a trend point of view. This is just to know what is happening inside. So when we look at the inside, like this is 50% rebound, you can see, and then another attempt to break out. It came down, but not all the way down. And then this is like positive consolidation. And as I speak now, I think it's looking for upside move. This is positive. So when I zoom out, let's look at 1 day now. When we zoom out, there's no fundamental change as such except this ugly move. But now you can see that that ugly move is not a bad one. Actually, look at the closing price point of view. When you look at closing price point of view, you avoid those spikes and you get this clarity here as well. In the prior consolidation, it was like consolidation was happening in ascending manner and then a breakout like this. This is also actually happening in ascending manner. If you follow these lows, closing low, I would say it's not a low of the candle. This is closing price. So all this closing, if you look at, actually it's going up. And that's a beauty. That's how one has to develop their eyesight. I mean, his or her eyesight, I would say. It helps understanding what is really happening. So this kind of line view is very handy. Candle view is amazing, no doubt about it, but sometimes you have to switch and see what is really happening for more clarity. As far as trend is concerned. Mm. So if we zoom out further, right, this was the largest consolidation, right? Huge one, largest one, and then a breakout, and then consolidation. Actually, the consolidation was not, it was two-phase consolidation. I don't want to go the micro level though, but let me cover it. I'll just mute everyone. So actually it was at an angle. I don't have, or maybe I can use some different drawing like this one, like this. The consolidation was at angle. That's what I was trying to show here, like this. And then a breakout. And then again consolidation. This is more like horizontal one. Shapes are not important. Point is this kind of phase where it slows down. This is actually super bullish. Because when consolidation happens in ascending, it's super bullish. And this is also not bad. Sometimes it goes down and then goes. Sometimes the consolidation is descending. These are different flavors. These are the most bullish one, and these are normal ones, I would say. Nevertheless, I mean, look at if you look at the direction is up, right? It's trending up. In fact, if I show you from here all the way like this, it's trending up. So this is just to understand phases that okay, it started going up from 25K, right? After huge consolidation, there was interim consolidation, breakout, another consolidation. So this is part of the game. One has to understand the big picture, and that's what we focus on. Because if we focus on big picture, then only we can avoid emotional drama that goes on, within our mind. Otherwise, it bothers a lot. And another thing is, we are supposed to take advantage of the bull run. And if you're very sensitive to the price action like the day before, then we cannot withstand. I'm not here to advise anyone. I'm not here to give lecture on things, but I wish that one should take advantage of the bull run without being so sensitive, doing in and out. That's the thing. I mean, as I said, it's very individual decision. But sometimes I see that some people are so sensitive, they leverage, and I say, why to leverage? Just sit tight and just understand what it's doing. Take advantage when there is dip like this, because the supports are not broken. When it breaks out, take advantage of breakout and so on. Yeah, and so this is the phase where you don't do much. As from an experienced trader point of view, it, it's not about BTC. I'm just talking about general setup. During horizontal consolidation, it's called trading range, where you don't do anything unless you are very much available on and watching your screen each and every hour and want to catch each. Then one can say, okay, the upper range, you're playing with upper and lower ranges. It's very hard to time it, but one can do if there's enough time. But yeah, but sometimes it's also too much of effort. There are always pros and cons. One has to do and experience how it goes and decide what makes sense. I have done everything, and based on my own experience, I would say sometimes it is better to swing trade. You know, be patient, do something else in life. You know, sometimes if the trend is really doing good, and there are some phases it's like break. It takes break, gathers energy, and then prepares for the next. This kind of mindset is needed. This kind of vision is needed for 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 trader to be a long-term swing trader. And I always believe that those buy and holds are one extreme because they face 90% drawdown. I don't like them. And I don't like leverage traders who do in and out. Those are two extremes. I love the swing trading. So one day looks amazing. Let's look at 1 week.
Why doesn't it?
Maybe it's in church, I don't know.
It's battery. Yeah.
Oh,
Just listen like this.
so let's look at weekly. So this is super simple. Now in this view, I don't have many drawings, and I purposefully didn't click actually. But I'll remove this because this is not going to break down now. This job is done, so what I can show is simple. I mean, this is also covered in other layouts, so probably I'm not adding any value here. I'm not adding any value here. Anyway, because I think I have another layout, this one, where I have this range. So we can say that we can look at this range, and so the dip that we talked about, which was similar dip like 3 weeks ago, and then this range was never broken. So there is absolutely nothing happened. This is no. I mean, from a trend point of view, weekly trend point of view, the recent downside move was nothing but noise. And that's the point I was making. And technically speaking, it hasn't changed anything. The structure is intact, very well intact. In fact, it's very positive to see this kind of rebound. It didn't reach this level or layer or zone. So what else can we expect? Nothing better than this. So this is very positive, and I think it's preparing for another shot on upside. So 48K, 50K in a ring. That's what we have on our next resistance on that Binance short, right? 48K range. I added one more at 50K. This R5. That's what it's looking for, 48K to 50K. Yeah, this is good. So here I'm not showing any price resistance because here the idea is to track the trend, the shape and the angle of the wave, right? So if you look at the big picture, the white arrow that you see, tuck, 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 tuck. This is a very important zone in my point of view. I don't want to sound alarming, but this is the level I was talking about a few weeks ago, that after this particular range is over, there is one more level to be broken about, and that is 48K to 51K range. I believe this is the most important range. If you think that this is out of the woods, it is not out of the woods. It doesn't mean that I'm pessimistic. It doesn't mean that I'm talking about breakdown. I'm talking about a checkpoint. I'm talking about important level where we have to focus and see how it behaves. Right now, if you say this is going to go down, you'll be kicked out or you'll be, slammed. And of course, why not? There is nothing wrong about it. We are level-headed. equal. I'm not saying other are not. What I'm trying to say is we are not, we are with the uptrend, no doubt about it. We're not talking about downtrend, but we have certain levels or zone marked where we are focused and where we kind of neutralize, not neutralize, we become neutral, so to speak. Means we don't have strong bias. So when it is near breakout, we look for breakout because when you trade or hold position, you have to have a direction, and the direction is up. There is no doubt. So let me clarify that. There should not be any ambiguity in understanding this. The direction is up. But when we choose the direction and monitor the progress, there are some checkpoints, and each checkpoint, what we do is we become neutral, right? So right now we are looking for upside breakout, but as soon as it hits 48K, 50K range, we become neutral. And then that helps a lot because if it starts retracing from there, we are mentally prepared. If you are in a mindset of strong 100K, 200K, 300K kind of a level, and you are very rigid about those levels, it is very hard for you to recognize the change. So each time it enters a resistance zone, we become neutral. Neutral is not negative, right? It is about being open. And once we see there is a sign of upside breakout, we again prepare for the next level. Let's say all-time high, 60K range, 60K to 40, 64K range, 66K range. So there will be another zone like that. And why not? We can depict that one right away. There's no, there's no harm in doing it. But I'm not going to show any arrow. See, the white arrow is up to this because this is going to be my image, a very important checkpoint. You won't believe. Um, and on this call, and here I'm going to continue watching and provide you the updates. So the whole idea is to not get any surprises, right? And prepare for any kind of surprises in case if there is. Yeah. If I tell you that this is going to go 300K, it feels good. Why not? But I don't talk about that. If I talk about 10K, it is so crazy. So I don't even talk about 10K or 300K. It doesn't make sense to me, even if I'm tracking high level. So there is no harm in talking about 300K. It will excite people, but excitement is also out of balance actually. Getting panic is negative excitement, and kind of ecstatic state is also positive, positive side. I mean, imbalance to me. So each, I would rather say it's good, healthy. This is a checkpoint, and I would like to see what it does here. And also, it completes the round trip. If you pay attention to this one, especially on the line chart, you'll see something. Maybe I'll look at on this one. You see what you that line chart will show you the clarity here. I'll show you the shape of it. Curve. This is a total recovery. This one. See, this is a little elongated. It's not symmetrical. I'll show you what I mean. This is a midpoint. I'll draw with some different color like this. Now, the symmetry is distorted. Why? Because of this move. Ideally, the ideal path would have been something like this. Ideal path. When I say ideal path, means symmetrical path, which would be in that case this like this. You see, probably you will recall math class, hyperbola, and all those crazy charts. Remember? Anyway, now you can see the symmetry where the white line is a midline, where it could have gone up like this, but because of this crazy downside move, it delays. And this is also from your learning that how things delay and how sometimes the target with respect to timeline is tough. I could say that 50K is achievable in September. Now we can say that 50K is achievable in month of January. So you see the one whole quarter is lost because because of this particular downside move. And that's what we have to account. And that's a fine tuning one has to do. So when we talk about the price, like the far-fetched price with respect to time, it's not going to be accurate. But what we have to do, we had to track the trajectory of the wave, the angle of the wave, and say how it is making progress. So based on the progresses, so because of this delay, now the trajectory has changed to this one. You see, now it is Jan M or maybe January month. So that's why you see the symmetry is now distorted. But that's not a problem. It's not like human figure where this is left side of the figure, I mean the body, and this is right hand side of the body, which is symmetrical in nature. So technical, when you do technical analysis, you try to find symmetry, but not always you get the symmetry. You get this kind of distortion when there is some kind of unwanted phase like this one. This is totally, this downside move changed the symmetry, right? So this I ended up explaining without any plan, but I hope you find this extra piece of information useful from technical analysis point of view, and also understanding how price with respect to timeline changes and why TA has to fine tune and redefine the timeline because of some kind of roadblock. It's like going from point A to point B. Now, when it is nice, clean road, then you can estimate. But when you see this is kind of a traffic jam or some kind of a detour, then you can expect some longer time, right? Longer journey, because of this is like a detour, but it is now on path of that range. So your point B gets delayed in that the process, and then TA has to fine tune it in terms of timeline. That's how it is. So with this understanding that this is very positive, this is waste of time. And now we see that it is coming to this range, 48K, 50K range, let's say this one, and this going to become a major checkpoint. There is a CME gap that I talked about last time. It hasn't fulfilled. I believe that um, I had to mute everyone again. Um, we'll look into the candle chart. The gap hasn't been filled. In historical, all the gaps are filled. Um, I have this small indicator. So it shows this gap was filled here. This gap is not filled. It is not that it must be filled, but historically all the gaps are filled. So what does it mean? Probably it means that it might come back to fill this 39,700 range. It might come back. And from where it might come back, in that case, it could hit 48K, 50K range. We'll go to this now, earlier um, layout. So in that case, we are talking about this range. So it is possible that we might see a downside move from here, and then it fills up this gap, Yeah. the gap that we saw on this one, like that. This one, 39,700. Right. Not that deep, but yeah, this somewhere here. I'll just extend it. So this is a scenario. So it could have happened from here. It didn't happen, or it hasn't happened. It's likely to go up, touching 48K, 50K range, and retest this level. When it does, actually, it also creates nice symmetry, and then goes for the next level, which is all-time high in mid by, and it can take 2 quarters in by June end. As I said, we depict this kind of picture or path, but we have to fine tune if there is any derailment or delay. Now you understand. Because of this, I explained, right? Because of this, it derailed or delayed, not derailed, but derailed, sorry, delayed. Similarly, if there is any other further, so this much is fine. But if so this correction could happen, I believe, next month. So this month it should continue to go up, or by end of this month, it could retest this and fill up the gap. Not just fill up the gap, it could actually go down all the way here, much deeper. We'll see that, but at least this much, at least this much. It could extend further, you know, it could extend and retest 33, 34K as well. That would be a major correction. And but that would be healthy again, like this one in between. This was a redundant one. This was a deep one. So this one could be like that deep one. It depends. It may not happen, but this much is something I'm anticipating based on the structure and based on the CME gap. That's my reasoning. And then it follows this. Maybe I'll show with a different color. Yellow part indicating it's heading for the yellow level. So the blue indicating the blue. Yeah. Right. And once that happens, then we can say it reaches to previous all-time high, and that becomes another big checkpoint. Remember. So I hope you get the clarity. Just to recap, the trend level, right? This trend is up, nice. This consolidation is positive. The recent dip didn't break this layer, as you could see. So it's looking for the next 48K, 50K level. And then the retracement is expected. Retest this 39,000 range where it will fill up the CN gap. In worst case scenario, it could go up to 33, 34K range, where it might touch this. That would be extreme. That would be extreme, but not devastating. And of course, all coin will suffer badly. I mean, that's given, obvious. Even this one will be too much for all coin, as we know. Um, but yeah, so once this is done, the another move, another leg up like this leg. So if you look at, there are going to be 3 legs, if I may count. So this is bottom 15K range. This is the first leg all the way to 31K range. Then a retracement, and then another major leg touching this 48K, 50K range, the retracement, and then third leg touching the 64K plus range, right? So this is how I see. On this one, you see more like three, three, and two, but, but there are 3 legs. One, two, third is not healthy, right? So if I may zoom out now, this is the most important level where we'll have a checkpoint as I mentioned, and how deep it goes, we are going to track it. And I have another pattern that which is built on this head and shoulder pattern on this angle. This magical line, please don't forget this magical line, which will be extended here. So if it retraces, now I'm talking about doomsday scenario. Okay, again, probability of it very low, but this if this continues, not and then touches this one, and it if it fails to, and it could bounce, and then if it fails there, then it could really go down deeper. That's the doomsday scenario, and it could go down deeper. Now, where this could happen, I would say there's only one scenario that can trigger this kind of downside move, that is inflation. To be honest, I don't think inflation, we are out of the inflation drama. I want to be very clear about it. When I talk about macroeconomic factors, and I'm going to show you some data, because the DXY data and the bond yields data we track. First of all, the November month core inflation in the US didn't go down, but actually slightly up. But it was not significantly up, so market was saying, okay, now it's not that bad. But there was no good news, to be honest. So how it goes for December, we'll come to know this month. I mean, how is the situation for December data? We will come to know soon. So that's very important. Um, the market is going up in anticipation that the Fed will cut the rate, and that anticipation is based on the inflation number. Now that's assumption, of course, the assumption. So my focus is going to be inflation, and I believe that all of us, like on this platform, we should keep on focusing on core inflation number. So, but you know that the market is always futuristic. So the data and the market price, it has lag, or I would say um some misalignment. So you have to consider that. Um, yeah. So anyway, that is something when it comes, we'll check it out. But that's the only scenario where something worse could happen. Otherwise, we are talking about all-time high and so on. But as you know that I'm not someone who is going to talk about this. There are a lot of things to be done. First of all, what it does at 40K, 50K range is my immediate focus. And if it starts retracing, then my focus is whether it stops here or goes below. If it goes below, then I'll have to keep an eye that it doesn't go too much on the downside. And if it starts bouncing up, and then I'll have to monitor that it regains the lost ground here, and then we talk about new all-time high. If so, once it reaches here again, after all the retracement, this is where I would feel better, to be honest, and probably talk about new all-time high. So so the journey is likely to be this: up, down, all the way down, maybe up to this. And then when it reaches here, this is where I'll feel comfortable about talking about new all-time high. That's my explanation. Until then, I'm going to be very much watchful. And the reason I mentioned, that's how it is. Let's look at 10-year bond yields. So if we look at the 10-year bond yields on monthly, okay. Um, This is a bull run for the yields, and it retraced, but you see that it hasn't come down deep enough. On a weekly, on a weekly, it is bouncing. It is bouncing, but this bounce is tiny. Unless it reaches this level 4.5 or some 4.5, yeah, there's no threat as such. But if it starts recovering like this in a V shape, then that's a bad sign. that will be a bad sign because the market is expecting this kind of bounce is fine. Market is expecting another leg down and continue. Basically, market is expecting it to continue going down in this way manner. Basically, reversal of this move all the way here, and then about another bounce and then breakdown. So basically, something like this. Let me show you that. So this is okay. Something like this, like like this, and then eventually break down another attempt and and something like this. It's very interesting. It should be red like this. Okay, so this is the happy path for us, right? Going down is a happy path for us. We don't want this to be here, right? Now this is here. We don't want it to be somewhere here because that's a bad, that will be a bad sign. So if it goes up like this and then retest this level and then goes up, then that will be, in fact, I should keep this in red and this is green from our perspective. So this red path is not good path for us, right? So in that case, it is kind of a W-shaped recovery. But the real effect will be realized over here, which is February month. That aligns with what we talked about. That in January it's all good, but in February is somewhere. So I'm trying to realign with this data potentially because on a weekly scale we can do it on a trend basis, on a trend point of view. Ah, okay. What else? So that's bond yield. So bond yields are not down yet. No way. Yeah. This look at this trend. This trend is not. This is tiny retracement when you look at this trend. So this is still the in bull run. Okay. So that's why I'm keeping my head at a center. No matter what social media is talking about. I'm not going to ignore what is happening here. Let's look at the dollar index. So the dollar index has come down from our resistance, which was pretty accurate. This was in fact perfect. And then came down all the way here. It's bouncing. So this bounce has caused a problem recently. In last week, this bounce was, I mean, there is a news about ETF. To me, it is not just ETF. It is also because of this bounce from from DXY because there was no significant bounce like this recently. So I believe it's a mix of both. People are just talking about ETF delay. That is the news why we saw an impact on BTC, but I think it's not just that. It is DXY as well. So this is looking good from the XY point of view, but not from Bitcoin point of view or crypto point of view. However, this is not high enough where we should be worried. Only it should not go beyond 104.5 or something like that. That will be bad for Bitcoin. So let me depict that here. This is no no no. Mm, six, 104. It should not be this. Not immediately, we'll have to assess it, but that's how it is. When you look at the larger picture, I'm zooming out. There's a huge green channel if you're not noticed it. And all the cycles are built within it. And this is just for I'm just adding this. Um point just for the benefit. You don't have to do all this actually because crypto cycles are very small. Right, this is how it looks like. When you look at this, is I see some kind of a symmetry where there it is a downside move, upside move, and then this kind of a move. If this happens, then it's devastating for stock market and crypto, and this kind of a thing could happen if inflation goes up. So that's why we have to be level-headed here, to be honest. The social media is not ready for all this, but we have to understand. This is for understanding. This is not happening yet, but we talk about everything. So point I'm trying to make is DXY is not down yet. Let me hide all the drawings. This down, you see that this is more like a retest of this zone. So this was the leg down consolidation attempt for recovery failed, came down, but you see this monthly candle is up. Now this may not go up right away. It is likely to go sideways like this, which could give us a quarter or so, or maybe a couple of quarters that we talk about June month. And if it starts going up and it goes about this, then it's a big deal. Then it's a big deal. Maybe, yeah, last resistance, that's the last resistance. But above 104.6, I mentioned is going to be a, sorry, which level? 104.6, yeah. That could trigger a risk here and definitely confirmation if it breaks above 107 point something like, yeah, that level. Basically, if it closes above this or crosses them, then that's a real danger we talk about. Okay. And I don't think I mean, there can be miracles, I don't know, but in that case, we'll have to see. So I'm trying to cover everything. This is the beginning of the year, so I'm kind of laying out different scenarios from a macro standpoint of view. So macroeconomic data point of view, their charts, because their charts are related, if not for everyday movement, they are related. And their patterns need to be understood here. And that's why I'm covering this in detail. I hope you find useful. Let's look at Bitcoin dominance here. Bitcoin dominance is not going down. Two months of downside move give the all season, you may say all season. I don't like the term, but basically now BTC is going up. So only if you selected one could go up if this continues. Otherwise, yeah, going to be tough. You can see that. But let's see how it does. But definitely BTC is getting stronger here compared to the odds. I'm not saying stronger um, because it's consolidating for last 1 month. So yeah, so Bitcoin dominance is basically getting stronger. I think that's the way to put it. I think that's it. That's it from all the reference data point of view. And stop here, and then we'll start